It looked like one of those projects, the kind everyone talks about, the kind that spreads fast, the kind where if you're early, it will retire your bloodline. Momentum everywhere, timelines were raving about it, that familiar to-the-moon energy. Then the logos appeared, partnerships with Kalshi and Polymarket, not vague coming soon promises, real names, real platforms, the kind that quietly lower your guard. This didn't feel like a gamble or a meme, it felt structured, familiar, safe enough to stop questioning, and that's exactly why people leaned in. But instead of breaking, momentum faded. The ICO was extended, the token generation event was pushed 3 times, then came a switch to a different blockchain. Nothing dramatic at first, just enough friction to ignore, until it wasn't. The token did launch, and then it collapsed almost immediately. No organic price discovery, no real follow-through, just $11.5 million raised and a 99% crash that left everyone staring at their screens. Not hacked, not exploited, just gone. Even seasoned influencers were confused. People who'd seen multiple cycles. People who thought they knew the patterns. How does a project with real partnerships, real traction, and non-stop validation unravel this fast? This wasn't a low-effort meme coin scam. This felt like a 2017-style rug pull happening again in a market that swore it had evolved. And when the dust settled, something uncomfortable became clear. No exploit, no zero-day bug, no force, just narrative, distribution, and timing. This is the story of how hype, social proof, and modern crypto marketing turned legitimacy into a weapon. And to understand why it worked, you have to rewind. If this already sounds insane, hit like, it helps more people to see this before the next one happens. 4 months earlier, none of this looked dangerous. It started with a founder, Unwise. A faceless X account, no profile photo, no personal brand. The first tweets appeared only in July 2025. Normally that wouldn't be a red flag, but timing matters. Because by September 2025, crypto had found its new obsession. X was buzzing about perp dexes. Aster was everywhere. The new perp dex backed by Binance, CZ involved, positioned as a direct competitor to Hyperliquid. On September 17, Aster released its token. At the same time, Lighter, another perp dex, was wrapping up its season 1 of its points program. 2 major events, same category, same week. KOLs didn't need convincing. They followed incentives. Everywhere you looked, timelines were flooded with perp dex threads, comparisons, and speculations. Perp dexes weren't just a trend, they were the meta. If meme coins didn't make you rich, perp dexes will. Then, on September 28, Unwise published an article. Not an announcement, not a pitch. In that article, he posed a question. Why can't you long or short Pokemon cards, watches, houses? It didn't explode. 17 likes, 3,000 views. But it didn't need to. It landed in the right feeds, at the right time, inside the right narrative. That same day, TroveMarkets.com was registered. The direction was set. This wasn't coming out of nowhere either. There was already a collector crypt putting Pokemon cards on chain, a real reference point. From there, the idea felt obvious. Build an oracle for real-world collectibles, add funding rates to balance the market, design a collateral engine to enable leverage. In theory, it all worked. Then, on October 7, the follow-up dropped. The Trove Markets announcement article. 75,000 views, 151 likes, 11 retweets. Now it wasn't just an idea, it had a name, a narrative, and momentum. But momentum alone doesn't move money. For that, you need something else. That something else arrived right on time. On October 13, the beta version was released. More screenshots, more demos, more proof. Around the same time, Trove launched the testnet.
First stop, I click Get Testnet USDC, choose Base or Arbitrum.
Sign-up codes started circulating, and those codes became scarce. Influencers were posting about it, people were begging in replies. Marketing was clearly working. Validation no longer came from the functionality, it came from visibility. Then something else happened. On October 22, the CSGO skins market crashed. Valve changed some rules and the prices dropped hard, and Trove played it perfectly. They posted a massive profit P&L from a short on a supposed CSGO skins, the kind you see when closing a position on most exchanges. Crypto Twitter knows this format, it's the native language. The post went viral. Everyone wanted access, everyone wanted a code, everyone wanted to be early. Here's the strange part. Do CSGO skins even exist on Trove? No, but nobody cared. The post did close to 300,000 views. 1.3 thousand likes. Around this time, Unwise posted something that explains a lot. Half products with strong marketing are better than complete products with lousy campaigns. Unwise's ethics might not be of the highest standard, but you can't be both a scammer and a shitty marketer. This wasn't just a product being built, this was attention being engineered. And once attention replaces verification, doubt becomes optional. Anyone who has actually built a perp DEX knows the hard part. Order books, funding's logic, execution speed, liquidity, all of that takes time. So when Trove asked a smart question, it made sense. What if there was an out-of-the-box solution? On October 30th, they announced Hyperliquid HIP-3, a new technology that enables building perp DEXs on Hypercore. There was just one catch. To launch on HIP-3, they needed to stake 500,000 HYPE tokens, valued at around $20 million at that time. Naturally, people asked, where does that come from? Then, on November 8th, the answer arrived. They announced they had raised the required amount. Validation at the highest level, except there was a problem. Ex-user Kolosama raised doubts almost immediately. On-chain data showed something strange. The wallet Trove referenced had received the 20 million 16 days earlier on October 23rd from OKX, which means when the HIP-3 announcement happened on October 30th, they already had the funds. Weird, but still explainable. Later, Unwise appeared on ThreadGuy's stream and claimed it was a 3-year loan, in exchange for 20% of fees in perpetuity. At the time, most people shrugged. Now, it wasn't just a prototype and a couple of viral X articles. There was real funding. Trove also celebrated reaching $1 billion in trading volume. But since they were on testnet, it had to be fake volume. No real money were involved. That was a big red flag, but only for those paying close attention.
$1 billion in total testnet volume, but the volume's fake? So why are we even talking about this?
You can still visit Trove.markets and see that all prices and order book numbers are mocked. When you zoom out, the price literally moves in a straight line. But Unwise was relentless. Here's his response when he was pressed by ThreadGuy.
Is any of the testnet volume real money or it's fake testnet tokens?
It's testnet tokens.
So then how does that reveal that the Oracle works and the system works?
Well, what's a good analogy? If I wanted to drive a car, it's just like putting miles on the engine.
Driving a car? Buddy, your car was still in the garage without wheels. Two major partnerships appeared, Kalshi and Polymarket. Two names that instantly signal legitimacy. Two platforms people already trust. Everything still looks good. And that's the dangerous part, because by now Trove didn't just have users, it had belief. 2 months of building and the setup was complete. On January 5th, Trove announced a 3-day ICO, scheduled for January 8 to 11, raising $2.5 million at 20 million FDV. The numbers weren't random, only 12% of supply, a very low FDV compared to similar perp DEXs, just enough room to feel early, just enough scarcity to trigger FOMO. And it worked. The ICO filled in less than 6 hours. That should have been the first signal. Unwise claimed they had 24,000 wallets prior to the ICO.
I misspoke. It was 24,000, not 42,000.
That's a big switch.
Freudian slip.
Yeah, Freudian slip, I guess. 50%er.
Even if most of them were farmers, let's assume there were a couple thousand real people. People were depositing their hard-earned money into the void. Yet very few complained that the main features simply weren't working. Those voices were drowned out by dozens of Trove, because at that point, the ICO wasn't just funding, it was the product. A leaderboard showing the biggest contributors, money pouring in publicly, competition disguised as conviction. But there was a problem. Most of the money came from the same crowd, the most active crypto tweeters, the same familiar names. To go further, they needed reach, they needed mass participation, and they needed louder social proof. That's when paid endorsements appeared. Big KOLs, big numbers, $8,000 to Whalewoosh, $35,000 to Orangey, $45,000 for a tweet from TGR, amassing 600,000 impressions. Over 3 days, $7 million was raised. Then the ICO was extended. More time, more urgency. Another 4.5 million poured in. Total, 11.5 million. Later, 2.4 million was refunded. By now, expectations were locked, and the exit path was open. Then came the delays. The TGE was postponed once, then again, then again. Meanwhile, something else was happening quietly. The $20 million moved away from the hype address, and on January 19, the final update dropped. They were moving from Hyperliquid to Solana. The liquidity partner that had been supporting our Hyperliquid path, including the 500,000 hype position, chose to unwind that support. At that moment, it became obvious. This wasn't a delay, this wasn't a pivot, it was an exit. When the token finally traded, the chart collapsed. Belief didn't break all at once, it cracked, then gave way. And by the time people realized what they were watching, it was already over. Once the dust settled, the investigation began, and almost immediately things stopped lining up. The Telegram account tied to the founder pointed to an Iranian phone number, but when he appeared on the Thread Guy's stream, there was no accent at all. That mismatched matters. Most likely it was a purchased aged Telegram account, a common tactic among crypto scammers. That was the first crack. The second was understanding what Unwise was actually good at: marketing. Not building, not shipping, marketing. Create a narrative, engineer FOMO. That alone is enough to pull in KOLs. And once they're in, they don't just tweet, they write checks, big ones. Rune alone put in $200,000. Orangey also claimed he was an angel investor in Trove. Pay an influencer and he will post about you. Convince him of the vision and he will invest and promote you non-stop. Social proof feeds itself. During the ICO, funds were routed across 4 blockchains: Ethereum, Base, Arbitrum, and Solana. And here's the irony. People think no KYC means no trace. But blockchains show everything, every transfer, every hop, every mistake. It's only a matter of time before Mossad builds AI financial tracer powerful enough to untangle most on-chain crimes that happened over the years. If you like on-chain investigations like this, check out my other investigation of a mysterious whale who opened a $516 million Bitcoin short right before the FOMC meeting. Multiple attempts were made to hunt him, but the ending might surprise you. On the day of the Trove's TGE, funds started moving. $7.6 million flowed into the Gnosis Safe 787, a multi-signature wallet typically used by organizations. Another $1.7 million stayed on Solana. That split matters. Ion Chains conducted an independent on-chain investigation. One of the wallets that received $100,000 of ICO funds turned out to be a Gate.io deposit address, C696. From there, the money moved again. It could have been 2 different people, it could have been 1 person shuffling wallets, related to Trove or not. But the next detail changes everything. The receiving wallet was labeled as an early holder of the Taker token. And early holder usually means one of 3 things: founder, early investor, or early supporter. The origin of that transfer traced back to the team wallet of another project, POPP. So now the questions shift. Was it the POPP team? Their investors? Remember, these were Taker tokens. An OSINT search showed the domain taker.xyz was registered by someone named Jin Ching Ching. Ion Chains suggested a possible link to a VC fund, Foresight Venture, which had invested in both POP and Taker. But there is another possibility. The scammer could have funded those companies himself and raised money from the fund. Or Unwise could have done everything alone. And this brings us back to the $20 million. Without serious backing, Trove would have been nothing more than a moderately viral X article. Before announcing the $20 million raise, Trove attempted an angel round through ICO. ICO would have required founder doxing, so the round was cancelled. There was also a real risk they wouldn't raise the full amount. Later, when Trove announced $20 million raised for an idea with no product and no customers, it was hard to believe, but possible. But no VCs stepped forward. No angel, no fund. That was another red flag, alongside an undoxed founder. So ask yourself this: did Unwise actually have that money from the beginning? If he did, there would have been no back and forth with ICO. KOL shilling would have started earlier, and it would have been funded with ICO money. The presence of a multisig and the rapid movement away from Trove wallets suggest a different story. Sometimes between October 7 and October 23rd, Unwise finds an investor. And the deal likely looked like this: park $20 million on a hyperliquid address until the operation finishes. Unwise sends 80% of the ICO funds to the investor, keeps the rest. Those Solana funds were never moved. They add up to about $1.7 million. And that's where the money trail quietly ends. One day before the ICO on January 7, Unwise made a claim.
It was 24,000.
24,000 wallets ready to trade. Real users, real demand for physical assets on chain. On paper, the idea was validated. In another universe, this story could have ended differently. With $11.5 million raised through the ICO, Trove could have kept building. Slowly, painfully, over months. But that path likely wasn't available anymore. The $20 million deal changed everything. Those funds were always going to move away from the hype wallet, no matter what. Once that happened, the reputational damage was unavoidable. Even if the team had tried to continue, trust was already broken. And rebuilding trust takes time crypto doesn't allow. So the easier option won. And that's the real problem. The scammers from 2017 didn't disappear. The ones from 2021 didn't learn the lesson. They are still here because the math still works. Trove's stolen money won't just vanish. It will seed dozens of similar scams. Same structure, same playbook, different name. Unwise will likely disappear for a few months, then resurface under a new account with a new narrative, and the cycle will repeat. I've seen this too many times to pretend otherwise. So here's the rule going forward. If you see an anonymous account raising money and no VC publicly announces the investment, just pass. No threads, no deep dives, no maybe this one's different. Assume that behind every anonymous founder is a 2017 scammer who never left. Because in this market, FOMO is optional, but consequences aren't. And that's the lesson Trove leaves behind. You can find me on X, leave a like, subscribe, and see you in the next video.